The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. Welcome back, PI listeners. It's a treat to be able to answer some of your frequently asked questions. One of the questions I frequently get because of my underwriting background is the type of reserves that we establish with each property to shield investors from any potential capital pitfalls or something. So when we're underwriting a deal, we include an operating budget and a contingency budget to cover unexpected dips in our occupancy. And then we have a higher than projected renovation budget and operating expenses and a lower than projected rent premiums. And as you can see, we're trying to gauge all types of scenarios during our underwriting. So when we come in at the end of the day, when we're all fine-tuned that underwriting and we shared everything, that's when we feel confident enough, or you should feel confident enough to be able to put it in front of your investors after you have calculated everything and pretty much mapped out every scenario that an investment could go through. So when they say conservative, and I know it's thrown around, but you are really, really conservative when you're underwriting. Now, we're not talking about lending reserves because that's another piece of the pie. We're just focusing on the actual asset right now as how do we underwrite to that, what the financials are saying from here, what we think we can do with the asset because of our experience, and marrying those two to make sure we're accounting for rent premiums that we expect, rent premiums that might come in underneath, that might come in under budget or underperform. How do we gauge against all that, and where's that happy medium? So if the market is, we can increase by $40 rent, let's be safe and say we can increase safely by $20. And how does the plan work according to that? And then what if the operating budget we think is calculated at $4,400 a unit, but it's really, after due diligence, $48 a unit? Is it going to screw up your calculations after due diligence? And where do you go back and fine tune your numbers within your calculations? Because when you're doing due diligence, one number might be a little bit higher and then another number might come in a little bit lower. So it's pretty much going to even out. So if all your numbers are higher, the deal is going to blow up. If all your numbers come in underneath, you got a really good deal on your hands. If it's middle of the road and balances it out, then you're still in line with your original projections. So that's my tips with underwriting. If you can factor those concepts into your underwriting going further, I don't think you'll have a problem being able to find deals and confidently put them in front of your investor database. Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.